Welcome SMT. Welcome to our day trading model. This one's going to be called the sessions time of day. And what we're going to go over today is essentially the time of days that you should be trading, the time of day that you should be trading, and how you can incorporate that into your trading plan. So the first one I'm going to go over today is the London Session Open. In the London Session Open is going to be a hot spot for the high and low of the day to be formed, right? From 2 a.m. to 4 a.m. Eastern time. This is when the kill zone for the London Open is going to be essentially running. When you're trading this London session, you want to essentially be trading it at 2 a.m. Eastern to 4 a.m. Eastern. And on when it's daylight savings, you want to be trading it from 1 a.m. to 5 a.m. because it's going to be operating on a different schedule. And also, you want to give yourself a good window for any manipulation, such as a news event or just something in surprise in terms of a report that comes out unexpectedly that was not reported on forexfactory.com, right? And we all know that we go to forexfactory.com to see where all news events are going to be taking place, right? And most of the daily range is going to be taken up mainly in London session, but sometimes you're going to have it where they consolidate London from 2 a.m. to 4 a.m. and then heading into New York, you're going to see some expansion out of that consolidation. So the second one that we're going to go over is going to be the New York Session Open, and that's from 7 a.m. to 10 a.m. Now you want to avoid New York Session when the daily range in London has exceeded 80%. Right, so when the London Session range exceeds 80%, you want to opt out of New York Session. The third part of New York is going to be London close at 10 a.m. Eastern. We close our positions from London because we could seek an entry point for reversals in New York City. We only look for reversals in New York City when and only when they've cleared more than 80% of the daily range in London session. So in short, when the London session range exceeds 80%, we do not trade New York. Or you can wait for London close at 10 a.m. And for the risk takers out there, you could short or hedge back the opposite way of the direction. So if we have an 80% range in London and London close comes in 10 a.m. Eastern and it's bullish for London, we can look for shorts in New York, London close, and vice versa. You want to close all your positions by 2 to 3 p.m. Eastern. 2 p.m. Eastern because that's when the range is filled, and 3 p.m. most definitely because that's the close of the stock market. And this is when the market's going to start resetting up until Asia. Now the Asian session is from 8 p.m. to 12 a.m. and you only want to look for small ranges, 20 to 30 pips, sometimes even 15. The setups you want to look for in this session is going to be high probability for value gaps, where the market makes an imbalance and you trade based on that imbalance. And these are most seen in Aussie, New Zealand, and Kiwi pairs, and also Japanese yen. Right, so, and on top of that, going back to the London session, there's something called the London lunch. That's 5 a.m. Eastern to 7 a.m. and where the market goes quiet and prepares for continuation or market reversals in the following New York session. Right, so I just want to keep you guys all aware of that. Now, for the sessions, you want to trade mainly based on direction. And on these sessions as well, you want to note that there's going to be days of weeks that you should be trading. Right, the first day of week, right, Sunday, you want to opt out because the daily range is going to be too small on Sunday. On Monday, that could create a small range typically that you could scalp for 20, 30 pips. On Tuesday, it's usually a good day to day trade, depending on the range and the economic calendar events. Wednesday, is generally ideal for your day trading model. And Thursday, you can see a midweek reversal generally, right? Um, what you could do is draw a fib from the low and the high of the week, and then there's going to be a 20 to 30% retracement off that fib. On Friday, there's going to be typically a small range closing out the week. So for Monday, it can essentially set the high of the week if trades are in a premium on a Monday. On Tuesday, London could post the high of the day, high or low of the day, 70% of the time. And then you'll see that based on a midweek reversal coming Thursday, New York, and Thursday, London session. And that's going to be important because you could catch their midweek reversals capturing 20-30% retracement off the whole weekly range. So if the week is bullish, you could see Thursday, New York or London having a reversal off the shorts. If the market is bearish for the week, you could see a bullish retracement Thursday, New York or London. So that's going to be this day trading model, the sessions time of day. And I'll see you guys in the next session where we go over optimal kill zones and how you could be trading using the Sunday opening price filter.